I like to try to make these webinars as comfortable as possible. So if you have questions, please, you don't have to wait until the end. I know some of you email me all sorts of questions all the time, which is great. I get a lot of email. If it's anything trader related, I try to answer it myself. If it's anything as far as support or reinstallation with the Atlas line or the Trade Scalper or the mentorship students here that have joined me here today in the room as well, you guys know that I always offer support, but it does take probably a day to get back to everyone because of the overwhelming amount of email. So I do get back to everyone. If after this webinar anyone has any questions, please feel free to email me, but it will take about 24 hours for me to get back to you. I also have a new class starting October 23rd, and those of you who have joined up, look forward to starting 2 months working with you, learning all the methods. So if anyone here is interested in joining the next group mentorship class, which begins October 23rd, please email me. I can send you all the details, what we cover week by week, all the information to have everyone who's interested be able to make that decision. Everything is included in full support as well. So I see here a couple of questions, and let's take a look here to start off here. The entry for the double bar long is more than twice the ATR. Would you still take it? It's a great question. So let's first talk a little bit about this idea and this notion of overexhausted, overbought, oversold, right? What does that really mean? In my years that I've worked with traders, we have this notion that if they're very strong up or very strong down, it means the market is going to continue. But that's really not always the case, right? If you think about what happens after a big move, after a news event, typically the market doesn't continue right away. It may continue later on, but it's not as if it's a guarantee that it's just going to keep on going. So after the market makes a big move, a big run, sometimes it needs a little bit to catch its breath, right? So what I've seen time after time is that the best trades are not the ones that explode and you have, let's say, 2 or 3 bars that are very strong, whether up or down. Those are not the best trades because where you're entering is after the market has already made a big move. So the idea is not to go in after the big move. The idea is to get in on the way up as this move is happening or at the start of it. Sometimes you just can't get it. Sometimes the market, based on news or any other situation, will move very strong up or down, and you get in after the fact, and then the market has nowhere to go. There's no additional push, right? And you need that push. You need buyers to continue. So if you think about all the buyers that are already in it, they are already in it. The market made its move. So the idea of this overbought, oversold has to be incorporated when trading. We have to think about this. So if you look at, for example, what happened here, I give a recommendation that says, and I teach this as well, I say, how do I know that if I enter here at 17.35 quarter, that the market has enough action or enough power to continue? Remember, entering here, it still has to move higher for us to be successful. So here's how I look at it. If I'm entering more than double the ATR from the Atlas line, and this is just for this double bar long trade, it becomes a higher risk trade, right? Because remember, the reason why we have this entry on the Atlas line, it's not anything secretive or magical. It's based off of price action. I always try to follow price when I enter long or short. So the reason for this